Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com for November 19th, 2007. Well, Monday has come and gone, and hopefully everyone had a nice weekend out there. And the overall market conditions were interesting today for the mere aspect that even though you're getting into a holiday week, and many people, including myself, thought there was a possibility for a small move up today or a flat trading, we did not see that. And it was very interesting because initially early in the day, light volume persisted, especially around lunchtime. But as the day got on and the selling kind of ensued and got a little harder here, we saw some more dramatic volume moves in the market. And it turned out to be, especially for a holiday week, a decent volume day. We did over 2 million contracts on the S&P futures, the ES-Z7 contract for December. And overall, it was interesting to say the least. We saw the Nasdaq closing down 43, almost 44 points, or 1.66%. The Dow down about 218 points, or 1.66% as well, and the S&P 500 down 25.5 points, or 1.75%. So over a 1.5% loss in all indexes here, and we also saw the 10-year yield drop to about 4.08, which is getting to that 4% level, which could be very, very interesting to monitor that as it gets closer to that point. Should it get underneath, then we need to reevaluate some overall effects that could have on the market. Now, what's another interesting asset that we're going to look at here in the market is the Dow closing underneath 13,000 for the first time in quite some time here. And overall, what's interesting here is that the Dow closing under that significant 13,000 mark can be looked at as a psychological barrier that's been broken to the downside now. And we have to see whether or not this has major effects. Now, we're going to show you a lot of charts here getting into things that are going to be still above support levels, even though they're not much above support levels. So we're really hinging on a key level in this market. And I still do have the little sense that we might see a little bit of a bounce here the next few days. Not a big bounce, and I'm not saying a big bounce by any stretch, but a sideways trade, maybe a slight upside bias just into the holiday week. Because keep in mind, Thursday the markets are closed. Wednesday, probably by midday, the markets are going to die out volume-wise totally because people leave early for whatever trips they're going to take. And Friday's only a half a day of trading as the markets close at 1 o'clock anyways, so volume will be non-existent on Friday as well. All right, now what you're looking at here is the intraday ES chart. And again, you can see the selling, and I'm going to bring up my trend tool here to try and look at a few things. And you can see right away pre-market we're trading right into this 20 moving average. You can see the 20 moving down here, and this is right where we're trading into. And the Nasdaq, the S&P futures never really get above there significantly. You know, we get up, but we never confirm the move up by another move higher and a close higher, as you can see right here. Yes, we closed above it, but we went right back lower after that. Then we never got above it again, and eventually it just failed and started to fall. And as the market got into the 10 o'clock, 11 o'clock hour, we bottomed out down here, traded slightly up, right about to that 20 moving average again, and then we fell hard again. And then we made a little W pattern here, and a move up, and then a move down, and an attempted move up, but by the end of the day, we just started to sell again right into the close. And again, as I said, the Nasdaq closed down almost 44 points here. Now, after the bell today, we did have Hewlett-Packard earnings, which I'll show you in a second here. And for the most part, they beat on both the earnings and the revenue line, and they raised estimates. And you'd think, well, that's phenomenal, and it should be trading up quite a bit. It is trading up, but about $1 here, and I guess that's a pretty solid move for HPQ here. And I'll show you that. There you go. And you can see we closed at 49.44, down $1.31 today, and we are bouncing back up $1 from that here at 50.38, last print right here. So you can see that should give a little lift to the market tomorrow, at least initially, as we are seeing the futures trading up after hours here as they reopen at 4:30, up about $1.25 on the futures. In a few other notes here, we again saw some selling in Google and Baidu, but they weren't dramatic. And I'm going to get right into the Nasdaq next, because the Nasdaq has an interesting phenomenon occurring here. Now, we talked about this M pattern formation on the chart that was worrying me initially. All right, and we sold off here, we created the M, then you have the A pattern. Now, there's two possibilities here. You have the A pattern forming here nicely, but you also have a double bottom right on the 200. And that's why I almost believe that it's almost too easy to think that it's going to break here. But then again, if you have the majority of people thinking it's going to bounce, it probably won't. So it's a very tough, fine line to walk. But again, notice you do have a double bottom. formation now in this chart. We did close near the lows of the day on the Nasdaq, and we did close above the 200. So as long as we closed above the 200, I do happen to believe that there is still some solid support at this 200 moving average. And a close below, however, and then I do think that we would go back to August lows on the Nasdaq, which, believe it or not, is about 150, 200 points lower on the Nasdaq. So be aware of that. It's a dramatic fall. But now the question is, as I said, the M pattern, and now you have the A. Well, the A, if it's going to complete, is going to drop off here. We're going lower if it's the A. But then you also have a small pattern here forming a possible W pattern. So it's kind of like a wait-and-see type deal. Should we break below here and close down here, then we can say, okay, we have the A pattern formation, and this was an MA pattern. Should we have a move up now, like this? Well, maybe we have the little W formation here, maybe moving back up to this support area. So, again, it's going to be a very interesting thing, and it's a little early to call, but you need to pay attention to all formations. You just can't look and say, okay, it's an MA 100% and go with that, because then you get caught off guard if this is a W. So you really need to, as traders, we always have to be looking at all options and be fully versed in every possibility in the market so we don't get caught off guard, because getting caught off guard is where you get wiped out. And that's the worst thing to do. And obviously, we always keep very tight stops so that it never even becomes an issue. But I know other people out there, especially beginners, aren't fully versed in all the techniques to protect. And protect is what you have to do as a trader. A trader's number one purpose is to protect. All right. Secondly, it's to profit. Okay, but if you go in saying I'm only going to think about profit, then you forget about the downside and you take big hits, and that's absolutely not allowed as a trader. You'll never make it as a trader. All right, now again, we can look here at the stochastics. We are getting low on the stochastics again, but in all fairness, there's enough room for it to go down a little more should it seem fit to do that. Now let's look at the SPY, because this is the spiders and it mirrors the S&P pretty well. And what's interesting here, and this is another reason why I think there's a chance of a small bounce coming, is if you draw a line underneath here, even though we went lower intraday than the low from last Monday, we still didn't close below that low. And that's the key there, folks. And that needs to be watched, because as long as you don't close below this low right here, then technically this bottom is still intact and you still have a double bottom formation here, okay? Tomorrow, if we were to close down here, on this next candle tomorrow, well, then maybe we would say, okay, well, the double bottom's broken, we might be going lower. So again, it's a little half and half here about, well, we're still holding, but things aren't very pretty. And again, you have a possibility of a W formation here. It's a very sloppy W, very tight and compact W, so it doesn't look like a W that could have a big up move in it, but it might have a small little jerk up here. Again, especially if too many people are biased to the downside, you always have the reverse move happen. It's almost always happens that way. Okay, intraday on the SPY, and you can see the same general move as the Nasdaq had and the ES futures had intraday. You can see the gap down right here. You have a gap right in there. You have the 20 moving average pretty much staying above all the way until you get to this point. Nice little W formation here, and you can see that. And then you have a little move down, a little move up again, and then kind of a little tail off into the close. And I think people are a little nervous. Citigroup got downgraded by Goldman today to sell. Not very good. You had Countrywide getting spanked today. Countrywide, I'll bring that chart up. Countrywide down $1.50 to $10.57 today. And that's a big drop for that market cap now. And it's just not. I mean, you can see this chart. And this chart was the high on this stock was 45 and change. Now it's trading at $10. This was one of the biggest loan operators, I believe, of subprime or those type of loans. I believe. I can't guarantee that, though. I'll have to do a little research and find out for sure. In any case, long story short, very interesting day today. We saw some heavy selling, and the question is, going into the holiday weekend, do they want people to be joyous with a small little rally, or do they want to keep pushing this market down to create that negative feeling? And in my personal opinion, I wouldn't be shocked. And again, this is just slightly biased to the upside, and I want everyone to be aware of that. Is that this is just me guessing based on my psychology, but all in all, maybe a 55 to 60% chance of upside. 40 to 50% downside. So it's a very slight bit to the upside here. But again, the reasons being light volume usually favors the upside. You also have the holiday weekend and Black Friday coming on Friday. You don't think that the big money or those that control the markets are going to want consumers going out after the market just gave back another 5% this week going into that, and expect them to spend joyously at Best Buy and Walmart and all these other players. So regardless of what the spending is and it comes out to be, you always generally go into those type of vacation days, especially when people are taking trips, places, and spending money. Let's face it, this economy is run on consumer spending. So think about that. And there's a few other factors, minor factors, maybe too many bears at this point. On TV, on the media is definitely on the bearish side in the markets here, and that could yield to a small bounce as well. So overall, it's just a slight bias. It's nothing that I would put my money on for a huge rally. No way, not even a huge rally, but even a small rally. But maybe a slight sliver of a favoring to the upside here, and we'll see if it comes to fruition. I honestly can't tell you guys. This is just my humble opinion and my guessing at where the market could be headed. All right. Again, talk to your financial advisor before making any investment decisions or taking any risks. These videos are purely done for speculation and just kind of fun and have fun and talk about the markets with everyone. Have a wonderful day. We'll talk to you tomorrow. Take care.